Hey, this is Daniela Cambone, and welcome back to the Daniela Cambone Show here on ITM Trading. We're all wondering where are gold and silver prices headed next. Well, with the recent pullback, skeptics have declared gold's rally over. But here we are with gold still holding strong, central banks still hoarding record tons, and BRICS nations plotting a dollar-free future. Enter Garrett Goggin. He's my no-nonsense macro strategist who's been calling this super cycle since the early days. He says the bull market is not over, it's barely begun, and he says he can prove it. Please welcome back to the show, Garrett Goggin, founder of the Golden Portfolio. Garrett, always good to be with you.
Excellent. Thanks, Danny. Nice to see you again.
Yeah. What a run-up, obviously, and obviously we've had some consolidation. You were not surprised. I know we've been talking offline about what's going on with the price action, but you say this bull run that we're seeing in metals is far from over. Why do you say that?
This bull run's different. It's supported by fundamental central bank demand that didn't occur in previous up cycles. The Ukrainian war, when the U.S. weaponized their dollar and they froze Russia's assets, foreign central banks started choosing gold over dollars. Because, they're owning gold, it's in their own vault, guarded by their military. No one's getting it. They ain't losing it. Whereas if you invest in U.S. denominated instruments, bills, bonds, notes, or dollars, Secretary Bessent could press a button and delete all your billions of dollars instantaneously or freeze them instantaneously if you run afoul of American foreign policy. So this is supported by significant fundamental demand from the central banks, and that's what's driving the gold price further. This is a long discussion, and we're not near a top, and I tell you why. I follow some metrics. Follow GLD shares outstanding, right? At the peak in 2011, the shares outstanding rose to, it was 450 million shares outstanding. Within an ETF, when money comes in, shares are created. When money leaves, shares are destroyed. They do that because they got to track the gold, right? Shares outstanding in the GLD, it's only 355 mil. So there's articles about massive inflows into the GLD. There's been some inflows. They are not massive. It's trickling in right now because the shares outstanding, 355 mil, they got to go up to the peak in 2011 because they peaked out. The gold's going to continue higher until the masses come. And that's why I watch GLG shares outstanding. If you look at GDX shares outstanding, they are at almost a 10-year low of 300 million shares outstanding versus a high of 500 million shares outstanding. No one's buying these gold stocks yet. And like I said, we're going to continue higher until the masses come. You can take a look at the S&P market cap, the S&P ETF market cap versus the GLD market cap. At the peak in 2011, the GLD rose to it was 0.007 of a percent of the S&P. Right now it's at 0.002. It's got 3x more to rise before we reach a level that even resembles 2011. And this rally is bigger and badder than 2011. This is the fundamental demand's way higher.
Okay, and let's add this to the mix now. We saw what the Fed did, cutting rates to its lowest level in 3 years. How does that have an impact, Garrett?
Yeah, no doubt. It's interesting following Trump and Bessent and Powell, and Trump and Powell are at odds. Trump wants to get rid of Powell, which he's going to be able to do at the end of this year because his term's over early next year. But Trump already has Steve Moran on the Federal Reserve Board, right? Steve Moran wrote the white paper, the Mar-a-Lago Accord, which says we need to devalue the dollar. And the way we're going to do that is use a dollar to buy foreign currencies. They're doing that. They just did that in Argentina. Trump and Bessent want lower rates. They want 1% rates. Trump's a businessman. He looks at the P&L. He looks at profits. It's all he cares about. When they continue their policy and cutting rates to 1% and devaluing the dollar, everyone's going to be a millionaire. The Dow Jones could be at 100,000, but a bottle of Coke's going to cost $20. It's just constant devaluation.
We'll get right back to the interview, but this is an important moment to ask yourself, when the next crisis hits, will you be properly positioned or wish you prepared earlier? I've spent over 2 decades reporting on global economic shifts, and what's happening now is unprecedented. In moments like this, timely decisions are critical. That's why we've put together the Private Wealth Playbook. It's a free guide showing you how to use gold and silver strategically for protection, privacy, and long-term performance. Click below or visit DannyReport.com to download it now so you can move forward with clarity and confidence. Now back to the show. Luke Groman also had a good point, in talking about, how to determine whether this bull run is over. He says it's far from over, and you just have to ask yourself these 2 questions. Let me get your thoughts on this. He says, 1, is the U.S. willing to let China make more of its weapons and eventually all of its weapons? And the second question is, will China and Russia elect puppet-like leaders, to use Israel as an example, that will basically just do everything the U.S. wants?
Yeah.
So and he says, so basically, if you answer no to either of those questions, the bull market is not over for gold here.
And one more thing, the Fed could stop gold's rise, but they'd have to raise rates to 10%. They'd have to make the dollar more attractive than gold. And
Right.
if they raise interest rates at 10%, the U.S. would instantly be bankrupt because of the $37 trillion of debt outstanding, the yield on the bonds, it's game over. Like, they can't raise rates. Growth is the only way out.
So obviously people are going to say, okay, what's on Garrett's radar there? Like I said, as we're speaking, gold's coming back a little bit here. But what targets are you looking at for gold and silver now?
There's something big that's going on right now that I don't believe many people have their mind around. It's the Genius Act, right? Genius Act, that's
Yes.
crypto. The U.S. embraced crypto. They want to be the crypto leader of the world. U.S. banks, like a few years ago, if Chase and JP Morgan knew you were doing in crypto, they would like kick your account out and freeze it. Now they're embracing crypto, right? And then U.S. opened up the door to stable coins. So within your bank account, people always saved in dollars. And it wasn't even a choice. It's just, all right, dollars, whatever. You're going to have a choice now. You're going to have Tether dollar in there. And you can save, instead of your U.S. dollars, you can go Tether dollars. And the deal with the Genius Act is the Tether dollar is not allowed to pay interest. That's why Tether makes so much money. You got Tether corporate, you got Tether dollar that's got 200 bill in there, and you have Tether gold with 2 bill. So they're getting all the interest on $200 billion of value.
How come they get away with that, Garrett?
Because that's the way they've been doing it in crypto land. All people want is a stable coin, to get out of Bitcoin and into a stable coin, so that you got dollar denominated crypto tokens that are pegged at $1, so you can switch it back and forth between Bitcoin and the stable coin, because it's hard converting them back into dollars and wiring it to an exchange. Once it's in crypto land, it usually stays in crypto land. And this Genius Act is a Pandora's box for the U.S. government, because like I said, once you go in crypto, like your assets, you can transfer them anywhere. And the Genius Act allows for that. Like, you can go right into crypto land, and you can go on a lot of the leading exchanges and stake your Tether on the exchanges and get 5% interest or 6% interest. You can go on Aave, a decentralized lender. You can stake your Tether there. You can get, I think, 4% on that. So, you're not getting anything in the bank. And out in DeFi land, you can get 6%, 4%. But the problem is, out in DeFi land, this stuff blows up every day. We just saw another blow up, Balancer.
Yes.
Balancer blew up today. It got hacked.
I want to understand this, because I did a great deep dive on the Genius Act with Jim Rickards, because he truly believes that people don't understand the repercussions. So in your opinion, who wins, who loses with the Genius Act? I mean, why would the banks want this?
Well, the U.S. wants it, right? Because they see Tether as the 15th largest holder of U.S. debt. So it's like, hey, let's tie them into the banks. Let's enable it so that they'll be able to support even more purchasing of our debt, because our foreign trade partners have walked away. And the U.S. expects this to provide demand for U.S. dollar-denominated debt. It is, but it's going to create the biggest bank run of all time, because when you convert into Tether, Tether's going to be buying debt with it, but you're going to transfer those Tether dollars out of the banking system. All of the banking assets are going to be transferred out into crypto land. And let me tell you one more thing. that's hugely important for gold is Tether's buying 2 tons of gold per week because the U.S. dollar denominated Tether, they have $200 billion in assets. 5% of that is held in gold. The rest is in 5% Bitcoin and U.S. denominated bills, bonds, and notes. Tether Gold has $2 billion in assets, and it's backed, ounce per ounce by gold.
Well, that's why I don't understand why the banks wouldn't be up in arms and say, hold on, we can't just have a run on the banks here.
Well, I don't think they're putting the pieces together. I think they're just looking at the demand for the U.S. Dollar debt. So they're saying, hey, let's bring in stable coins. They're buying a lot of debt. It's like, okay, so they bring them in, people are going to convert into stable coins, and bang, you're gone into crypto land. But the biggest thing is Tether Gold. They have $2 billion in assets. They're buying gold. And also Tether Corporate, the main group, they're buying a ton of gold too. They have their own vault in Switzerland, outside JP Morgan, outside LBMA, outside COMEX, outside the GLD, and they are stacking gold. And they are buying, it's almost as big as China. It's like 100 tons per year.
This is crazy.
And listen to this. The combination of crypto with gold creates the world's ultimate currency, right? Because you had gold, that was an ultimate store of value, but you never were able to transfer it. Like you never were able to use it for payment, right? Like the crypto community, they make fun of gold. They're like, oh, what are you going to do? Go to a store and shave off some of your gold bar? It's like, no, dude, you get crypto's instant transferability and frictionless exchange and throw that upon gold as the world's ultimate store value. It's the best currency of all time. And, I was at Beaver Creek in one of the largest gold shows, and I was talking to some of the CEOs. I was talking to Fred Bell from Elemental, and Tether just came in and took down 51% of it.
I was gonna say, what does that mean for the mining sector? I mean, are mining CEOs gonna be up in arms, or are they concerned about Tether coming in?
The miners are safe because Tether doesn't want to own miners. They only want the royalties because they understand the business structure of royalties. So Tether owns 51% of Elemental. Tether just announced on Friday that they bought 10% of Gold Royalty. They own 10% of Metalla. And they came out of left field. The CEOs of these companies had no idea Tether was coming. And, Tether's just acquiring stakes. They have massive assets that they're just kind of throwing around. They're a bull in a china shop. But it's investment into the sector and the creating the world's ultimate currency with Tether Gold. And think about this too. Now that crypto's enabled into your bank account, you're probably going to be able to make payments with Tether Gold or with Tether dollars. Do you know what I mean? Instead of having it converted back into dollars, if I owe you $100, I'll be like, all right, send Daniela $100 worth of Tether Gold. Be like, bang, bang, right from her bank account. This is transforming gold. And Juan Satori, the head of business development at Tether, told me, he goes, Tether Gold is going to be bigger than Tether dollar. I'm like, and I couldn't believe it. I'm like, Tether dollar's got 200 bill. Tether Gold's got 2 bill. Why? Because it's the best of crypto with the best, the world's reserve asset for 1,000 years. Which is preferable to a digital token backed by nothing. And then also, Juan, we were hanging out at Beaver Creek and having a good time. And, the World Gold Council was there. Randy Smallwood, CEO of Wheaton Precious, Nolan Watson, the CEO of Sandstorm that got taken over, and Paul Brandt, the CEO of Franca. And they're all on the World Gold Council. The World Gold Council is kind of an archaic institution, talk about the benefits of gold jewelry, and they're running an Elton John campaign about the beauty of gold when gold's at $4,000 an ounce. But they've been trying to do a digital token, the World Gold Council, but they can't do it. They don't have the technology. They don't have the bandwidth. It's likely that they're probably going to adopt Tether Gold. Tether Gold already built it. And now Tether Gold is illegal right now to hold in the United States. But you know what? So was Bitcoin a couple of years ago. And the Genius Act, it's now in the Senate. And it is converting crypto. They're trying to figure out who's going to regulate it. The SEC is going to regulate the security tokens, and the CFTC is going to regulate the commodity tokens. So this is going to pass in November. So when November happens, it's probably going to be legal to own, Tether Gold in the United States.
we'll have to keep track on that. Just getting back, obviously, to your input here on gold and silver. We didn't talk enough about silver. As we're speaking right now, still hovering around $48 here. Your thoughts on where silver goes next, Garrett?
Yeah, silver brokouts. Like, I believe in math, data, probability, and statistics. Like, I try not to rely on gut feels and how my what I believe. Silver, based off of regression versus gold back to 1972 on a daily basis, gold's 6% undervalued versus the gold price. I mean, what's a better thing to use to value silver than the gold price? They're linked hand in hand. So silver is trading at $48. It should be valued at $51 at fair value. But the thing is, gold bull markets have a roof of silver. In 1980, silver spiked much higher as a percentage than gold. In 2011, it happened as well. And at the peaks in 1980 and 2011, silver rose to a 160% premium to the gold price. This puts the silver price at $87 an ounce right now. So that's another factor why I believe this gold bull market has room to go. Because when silver blows off massively, it marks the peak in silver and in gold. And we're not there yet. Silver is still trading at a discount.
We'll keep watching. Garrett Goggin, founder of the Golden Portfolio. Thank you so much for joining us.
Good. Thanks, Danny.
And as always, reach out to my wonderful colleagues at ITM Trading if you have questions about this segment or about owning physical gold, silver, or maybe you're just starting your journey. Reach out to them. There's a link below in the description. Tell them I sent you. They'll take extra great care of you. And of course, subscribe to our channel. We'll see you soon. Thanks for watching.